Hi, it's me again. Today's market, yesterday's market, all the happenings in the White House, in Congress, it's time to talk. Just want to bring you up to date as to what we think is going on, what we don't know, what we know, and probabilities. Today the market dropped 473 points, measured by the Dow Jones average, after being down 645 points. Reasons given: trade war with China, tariffs. I have to believe there's something else out there lurking, something else that is worrying the market, maybe a geopolitical problem. But we do have other things on the horizon besides a trade war. We've got Iran. We received warnings from Mossad, the Israeli security force, that they know that Iran is putting together plans to hit back at the United States. Exactly how, they don't know. So we've sent a carrier out there. You know, they could bomb the Arab Emirates, Iran, Saudi Arabia. We simply don't know. We've got Venezuela and we've got Maduro, and lurking behind both of these situations is Putin, Russia. You know, are they stirring up anything? And then, of course, we've got our own three-ring circus here in Washington, with the Democrats just trying to get to Trump. Now they're trying to get to the Attorney General to get to Trump, and seemingly completely ignorant of real problems that are going on in the world. There's plenty to worry a market, but somehow I sense there's something out there that spooked the market down 600 points today. Nevertheless, some things to put into perspective when we're deciding what to do or what not to do. Maybe it's time to read a history book. In the 1930s, we went into, and so did the world, a very bad recession that ended up in war. And it was probably caused, the one single item that caused it was the Smoot-Hawley tariff. So here we are playing with tariffs again. And these tariffs came at periods of very high debt levels, and we have exceedingly high debt levels in the world. We've addressed those before. But global debt's been compounding at 13% a year for the last 5 years. No one's growing at 13%. So this image of debt and foreclosure on debt and default of debt is behind all of this unease in the marketplace. Don't know whether we're going to have a trade war. Don't know whether we can put this behind us or not. Trump's latest tweets, playing hardball with the Chinese, is sure, it spooked the market, but the Chinese are still coming to Washington. When we look at stocks and we look at investments, we look at earnings, we look at the banking system and the status of reserves. Is there a cushion in the banking system? Is there adequate money available to fuel further economic growth? And we've had great economic growth to date. All of that stuff looks wonderful, looks good, looks solid, doesn't bother us. It's this other business, Iran, Venezuela, what's going on with Korea, launching missiles and all of this. So the history books will tell us that behind a similar background, we launched the Smoot-Hawley tariff, and we ended up in a deflationary bust around the world, which ended up in war. Could it happen now? Sure. Is it going to happen now? I don't believe it will. I think people are more prepared after the 1930s experience, but I'm not in charge. We simply hope so. There is one item that we've been looking at with regard to the market, and it's the technical health of the market. When I say technical health, it's the technical studies in our profession evolve around looking at the movement of monies, looking at pricing, looking at chart patterns that are being provided by these movements, and trying to make a determination to figure out where the market's going in the future. The technical picture of our market has gradually deteriorated. We've had 3 assaults at the 27,000 level of the Dow, all of them unsuccessful, and each one of them over the last 9 months going up, and each assault carrying lower and lower volume statistics. And this has a characteristic of a top, but I wouldn't call it a top yet. We've had some calls from clients about maybe not performing in line with the market, et cetera, et cetera. I think the last 2 days may answer some of those questions if you have them. Our view is to stay in the middle of the road, stay positively constructed, but very liquid with a lot of reserves to act and or cushion accounts. So that's the story of the day. Sometimes in this business, doing nothing is the best option. Thanks very much for listening.